The International Accounting Standards Board has issued a new IFRS accounting standard to give investors better information about companies' financial performance. IFRS 18, Presentation and Disclosure in Financial Statements, will help investors make more informed decisions. It is the first significant change to companies' presentation of financial performance in over 20 years. The new standard introduces 3 key sets of requirements to give investors a better basis for analyzing and comparing companies. The first set improves comparability of the income statement. Investors use subtotals in the income statement as the starting point for their analysis. However, currently subtotals are not required or defined by our standards, meaning companies choose which subtotals to include. Our research showed that almost 2/3 of companies providing an operating profit subtotal. However, we found at least 9 different ways were used to calculate it. IFRS 18 introduces 3 new categories to organize income and expenses and 2 new defined subtotals, including operating profit, to give investors better anchor points for their analysis. The second set of new requirements enhance transparency of company-specific performance measures related to the income statement. The IASB calls these management-defined performance measures. Companies must explain why they've used these measures and how they relate to the items required in the income statement by IFRS Accounting Standards. This information will be subject to audit and improve transparency and reliability. The third set of new requirements includes enhanced guidance to make the grouping of information in the financial statements, that is, aggregation and disaggregation, more useful. IFRS 18 replaces IAS 1, though many of the requirements have been carried forward unchanged. Companies are required to apply IFRS 18 from 2027, but can choose to apply it earlier. Visit the IFRS Foundation website for more information and support in implementing IFRS 18.